Hi everyone, welcome to our Tuesday morning trading session. Hold on one second here while I get you the monitor. It looks like, I'm just reviewing what the market was doing yesterday. It looks like it did get a little bit more active after our trading room closed. It was actually kind of quiet until the afternoon session, at which time we saw the market fall off again a little bit. And it looks like it continued to fall off through much of the overnight. Here is the Raptor now for the NASDAQ. And if we just take a real quick look here, you can see that the London Open, the market continued lower as it did through much of the Asian session, a very active Asian session actually. So it's going to look like a little bit of an opening gap above here to traders this morning. We'll see whether or not they try to get into that. Crude oil on the decline. Here's crude oil for the Eagle. And we're producing a rule of three style signal here. We don't really have, well, we did get a test of the extreme. We've only had two counter trend signals. What I'm hoping is that we're going to see a little bit of a reaction to this low here, and perhaps the market move a little bit higher, give us another signal as it retreats into the hard edge, gives us that trend change signal. You can see our trade forecaster full on trend mode for about 50 minutes. We have gotten signals on the Falcon and the Hawk shortly out of crude oil's open, which was at 6 a.m. Pacific, 9 a.m. Eastern. All right, well, we're getting a late filter entry signal here on the Falcon right here. So the late filter entry signal, of course, occurs when the filter goes out of sync, comes back into sync, but the trend line never changes color. We're responding to the the secondary support line. I think I'm going to take that one into consideration, maybe cover it even above the primary support, just because this is very early still in the session. I don't want to get too crazy here. We're getting a comparable signal here on the Raptor, and we can set it up the same way, really. All right, so there we go. We're in our trade. I'd better get a stop in play here, and we'll use the same kind of stop. As what we're doing in the Falcon trade. And this is kind of like dipping your toe in the water, right? We're testing the water to see, is it warm or is it cold? Okay, so far a good start. Let's see if we can't get down to the break-even trigger. There's a lot of conflict you can see at this particular price level. Here come the buyers. So the buyers trying to shore it up. Here's our Geiger counter. Oh, I'm not liking that. There we go. Let's pull it over here to the short side and hold it. People ask about this envelope around the last bar. This is part of your Geiger counter. It's called the trade indicator. It's a short-term trade indicator. And it tries to give you a very short-term bias. So when it was red there, that red envelope, it showed us that the market was still bearish for the short term. If this envelope starts to turn green, if we were, say, in a profitable position, there we go, see it's starting to turn green, that's showing us that the buyers are becoming a little bit more influential. So if we wanted to check it out, this would be a good spot to roll our stops. and just take the early hit. I'm going to try to hold on, see if we're going to see some more selling come in here. And hopefully, no, look at that. The buyer's just chewing through those orders. Come on. Where did the bears go? A little bit of a sideways range. All right, you see the width of this bar right here? That tells us that there's a lot of activity at this price level also. So the market really pinching itself in a rather tight range here at the moment. Looks like the lows around 42.61, the highs around 42.67. We know there's a lot of selling going on up here and a fair amount of buying going on down here. Which side is going to let go first? Let's see how the Falcon trade is doing. It's still holding. Actually, I'm going to go with the same stop here above the primary, 275 half. There we go. So I'm on the alert now for the sellers to come back one more time, and then I'm going to become much more aggressive with my stop. Maybe even use the bar high low, which is our most aggressive stop strategy. All right, now give me one more bar. One more bar. Come on, sellers. Here we go. All right, so I'm going to go now with the bar high-low strategy. This is really the last chance that I'm giving the sellers to turn this market around. If they fail here, they're most likely to head higher, so it'll be time to pack up my toys and go. All right. Well, they're not willing to head lower. We could give it a test now to the upside. We are generating or working on a trend change signal. We do have a first micro macro cross signal here. I would not necessarily take this one right on the hash mark when I can take it just above the high. And I can also cover it below the low. All right, and that's darn it. My stop was just a touch too tight there. I hate it when that happens. Well, at least it was a small stop out. Okay, so here they come again. There we go. So we've got a green bar sell, and with the green bar sell, we have the option of course, selling it lower, but sometimes I feel that it's an easier to trade to take if we take a counter trend. Just that if it fails at this point, it is very likely to head higher. Now we're also developing a macro pullback. And that macro pullback has since moved into yellow bars, so it's void. Pardon me. Okay, let's try to set this up a little tighter now that we have that swing. And what I'm doing here is I tried to short the market. The market did not seem interested in heading lower. Therefore, I'm going to probably be more bullish this morning. Now, I could also wait for a first micro-macro cross before buying. Technically, we're getting a first micro-macro cross to sell. Oh, shoot, and that has moved into yellow bars. And here we're coming with yet another green bar sell. So once again, these exact same prices that we were looking at where the market was very, very tight, right? 42.62, 42.67, the same areas we've been watching all morning. Now what I did is I've deleted my profit objective just because I'm going to try to run this out. I think if the market gets above here, certainly above 42.72, which looks to be about the high here. There we go. Now we're getting a little bit of traction. I'm going to take this trade to break even now. So a little bit of a swing going on here. We're probably, yeah, I was going to say we're probably near a resistance line, and that's exactly the case. We've got the primary support right here at 42.75, the market giving us a little bit of a reaction. We'll see whether or not we can ride out that swing. No, don't back up on me. There we go, come on. Also a first micro-macro cross signal. So if you didn't get into the market here, there is an opportunity to take a first micro-macro cross. Shoot, they're going to be like that. And now that first micro-macro cross / macro pullback is into yellow bars. Oh, here we go. We got one more chance off of a red bar buy. Are you going to turn red for me? No, it's yellow. Now this yellow bar buy is not as dangerous as most. Do you know why? Because we haven't seen a test of the extreme. But notice the lack of follow through on the yellow bar signal. Now here comes the red bar buy, and again I'm going to try to run this out, even though it looks like it's going to be a pretty easy scalp. So there we go, we've hit our profit target on the scalp. Shoot, I should take it to break even. Nope, let's go, come on. Looking for the buyers to come back one more time. So we've seen the sellers kick in here. There we go. There's the buyers. So I can bring my stop in a little bit. I could even bring it into here. Once we break this level here, around this 42.71, oh, a little bit of a reaction there. There we go. Come on. We're taking another run at 42.72, which we know was a significant price. That's close enough for me to force it to break even. Let's see if we can't run it out now. There we go. So we're just challenging these highs again, 42.74. Sellers coming in, working a first micro macro cross. So if you take your first micro macro cross above this high, we're probably going to trap some sellers out of their positions. And that could see the market head a little bit higher. But, you know, we do have a fair amount of profit here, so don't be silly. Always let your pocketbook be your guide. There we go. Come on now. Good morning, Jim. Jim says there's about 600 buyers and a little over 2,000 on the sell side as far as the advanced decline numbers go. Don't forget, we did have that opening gap to the downside, so that's going to skew those figures a little bit. There we go. Come on. Keep pushing. As Ray Burke always used to say, push! There we go. Come on. There we go. There we go. That's it. Come on. All right, so a little bit of a retracement here. Come on. Come on, buyers. There you go. Oh, one more push. Get going. Whew, that was close. Oil prices holding steady. It's kind of interesting to see the NQ at odds with crude oil. Well, not that the NQ and crude oil follow each other that closely anyhow. Crude oil is going to respond a little bit better perhaps to the YM. Here's the YM. Oh no, it's not really following crude oil this morning. Crude oil very much in a downward move. Still don't have that pullback in crude, so it looks like you had your early chances on the Hawk and the Falcon. We don't have a second chance just yet. The YM sluggishly following the NQ higher. Well, maybe more reluctant than sluggish. And we've managed to ride out a nice little swing there. And where's our next resistance line? 42.88-ish, 87.88, and then back up to challenge 43, 4,300. So the only thing I'm not real happy about this morning is the small tag I took, because the market did give me one more chance on this run down here to adjust my stops a little better. But oh well, at least it was a smaller loss. Note the cloud crossover. So the clouds cross over, the market starts to retreat into that hard edge, came out, produced a signal. If you missed that one, it looks like we had another chance right here. Still working that one a little bit. And we're just having a fantastic trade here this morning. We've got about another 10 minutes going into the top of the hour. How are we doing here so far? Oh, look at that. That's a beautiful trade. 4 figures on the Hawk. Now, that's the way to do it. The market just going screaming into that opening gap. And 4,300 is going to be our next target. That's going to be the primary resistance here on our support and resistance suite. Right there. 42.99 half. Well, it's close enough to 4,300 to say 4,300. Now, it may even be time to get a little bit more aggressive with our stop loss here. Are they going to give me one more chance? Nope. There they go. So they're working into a macro pullback signal now, but shoot, that'd be my day right there. See you later. Thanks for coming out. Those are the kind of trades, that you live for as a trader. Remember, trading is not about frequency. It's about trying to capitalize on the high probability signals. So that's what we did this morning. We took 3 trades, I think, overall. Only one worked out. Right? I tried to short the Falcon off of this late filter signal right here, this late filter entry signal. And I think I initially set it up something like this. And my only error was getting too aggressive with my stop. I should have left my stop above this swing high. Rather, I got stopped here. So it looks like I probably got stopped for about $150. Had I held my stop back a little bit further, I could have gotten this trade to a break-even situation before the market reversed. Came back with a quick little trend change. I think we were already looking at the Hawk at that time, but we had the comparable signal here on the Falcon. So the thing you want to make note of here is that we tried to sell the market on a high quality signal. That's the important part, right? High quality signal, late filter entry. We know these signals have a high probability of success. Now, I realize that doesn't mean that they work out 100% of the time. There are going to be late filter entry signals that you take, even in prime conditions, that do not work out. But the fact that it's a high probability signal to the short side that did not pay off makes me suspect that maybe the sellers don't have control this morning. And therefore, we tried the buy signal. We did it on the Hawk, of course, but the setup was the same. So we were looking at buying, and then we chose to run it out, and we were able to take advantage of a huge move higher. as well as a nice tight little setup there. And then, of course, it's correctly capitalizing yourself based on your account size. So in my situation, I was able to take 3 contracts on the Hawk trade. I could have done 3 contracts here on the Falcon trade also. This is an amount that I can afford to lose. Now, I don't intend on losing that amount. If the market had continued to flounder, and let's say it started coming down against me, I can probably anticipate, because of this support, that the buyers are going to give it one more push somewhere. At that point, I start to roll my stop, right? And I go bar for bar for bar, and I roll it up. And even if I get stopped, say I get stopped right there, again, it looks like I'm going to be tagged for approximately half of what my original risk was. But even if prices did not stop, if prices continued lower and they tag you for the full amount, yes, it's no fun. But at least you didn't lose an amount that you could not afford. And I cannot tell you how important that is. I cannot tell you how often I see traders every single day losing more than they can afford to lose. And if you lose too much money, it isn't too long before you can't trade anymore. So it looks like here we got that macro pullback. We could have re-entered the market yet again. Macro pullback / 4 arrow consolidation combo. And we're getting one more push higher. Wow, they're really trying hard. Like I said, my day would be done. This is, when you're trading, this is very often the case. I'm not boasting, but very often you will be done in the first half hour to hour of trading. That seems to be where most of your best opportunities come. Now, if the market is like it was yesterday, where during that first half hour of trading, let's go back to yesterday, the market's like this, right? There's no opportunities there. You may as well take an early lunch, or in my case, breakfast, and then come back in the afternoon. Because if the market's not going to do anything in the morning, it's most likely going to do something in the afternoon. Well, what do we do now? All right, well, we'll hang out, but I think that was the move of the day, folks. We'll see. We'll see. There might be another run up here. Working a late filter entry signal here on crude oil. It's already come down a long ways. Oh, come back here a little ways. Come on. Give me a chance for a second push on that one. You may choose to take it below the low. Oops. Doggone crude oil. So darn expensive. This is why I try to get crude oil on the hash mark, because it takes pretty much all I got just to get in there with a position. We also had a macro pullback signal on crude oil. Nice little macro pullback signal right there. This one did not trip, but this is essentially a 3-arrow consolidation in crude oil. Remember, because crude oil tends to break out a little bit sooner, we'll take a 3-arrow consolidation on crude oil versus a 4-arrow consolidation. But when you're watching for those consolidation patterns, remember, they're going to, in the case of a downtrend, they're going to either have this bear flag shape or at the very least a sideways channel. Occasionally, they will have the wrong slope to them. They'll have like a bullish flag type slope to them. I don't trust them as much, but the principle remains the same with your 4-arrow consolidation. Ideally, I like to see them have a proper bear flag type shape, or at the very least sideways. And like I said, remember with crude oil, we will take the third signal. We don't always need 4, because crude tends to unwind a little bit faster. So a nice signal there off of crude oil. I'm surprised the eagle never came back and got into that hard edge, gave us another chance, but that's how it goes sometimes. You either take the first signal or you're left on the sidelines. All right, so here comes a lot of selling pressure again. Notice here on the hawk, sellers trying to press the market lower, and here's one of these 4-arrow consolidations which is moving sideways. This does not give me a warm fuzzy feeling. Oh darn it, Jim says the crude oil moved too fast. He missed the signal on the Raptor. Yeah, I've been there. We all miss those signals from time to time. So why am I not real keen on this 4-arrow consolidation? It's a high probability signal after all. Well, two things, class. We have an insanely strong uptrend, it seems, and we have not had a retest of the high. So for me just to blindly sell, given the overall context that we're seeing, may not be prudent. And now we're into a macro pullback, so things are starting to firm up again a little bit. And here also with the Falcon getting a trend change signal. I wonder if the buyers are just trying to bait the sellers. The overall market trend is down, no question. Short term. The overall long-term trend is up, short-term trend is down. Okay, so here we come into yellow bars again, here on the hawk, getting a green bar sell, which is obviously going to try to test the highs, and that's what we're seeing. So that was a little trap, a seller's trap. All right, now they're going to give us that first micro-macro cross signal again. I'm going to take a look at perhaps getting a signal on the Falcon or even the Raptor. And this is a little riskier at this point, folks. You know, we've kind of established the day's range. Here we are. It's a big range, but it's an established range nonetheless. So we have our highs in. This is a much riskier proposition than what we were looking at before. And to suggest that they're going to, where's our next stop? 43, I said. 4,300 and then 43.12-ish. Also producing that buy signal now on the Falcon, same one that we're looking at on the Raptor. We can set it up in a similar fashion. It's the basic trend change signal, also a high probability signal. But you can see how the initial momentum is kind of drained out of the market. Nope. All right, so we're going to scrub that. We're actually getting a soft edge sell. If you want it to be ultra aggressive, let's show that. And let's do that. Now I'm showing you this here. This is a soft edge sell signal. The market currently a little bit conflicted, but the soft edge sell occurs after we get our retest of the high. Right? So we're looking at a retest of the high, and we're anticipating that the market's going to try to get into this hard edge. That hard edge is essentially going to be retesting this little swing low, which, if it fails, should see the market probably find our first profit objective. Pardon me. All right, there we go. So we've hit the break-even trigger. We hit our profit target. We're going to take that trade to break even now. Oh, a little better follow through than I was anticipating, actually. I didn't think the buyers were going to walk away that easily, but this is the type of trade where you might consider it to be counter trend and maybe even, look at protecting a little bit more profit. Look to get out a little bit earlier if prices start to back up on you. Getting a little bit more bullish. See the trend indicator. Getting a little green. There's that little bit of a reaction now. Come on, sellers. Knock them down. There we go. There's that red trend indicator. Now, the trend indicator doesn't mean that the market is going to immediately move higher or lower. But short term, it kind of gives you that short term bias. So in this case, it did have some better follow through. As you can see, the market can move higher on a red indicator. So it's just to try to give you a feel for what the market's doing. But I'm pretty happy with that. I just kind of took the profit as we had it because, like I said, I would probably consider this to be kind of a counter trend style move. It looks like we had another opportunity here on the hawk as well with the red bar buy signal that failed. and the first micro macro cross / macro pullback, which are also in the works. The problem with those, of course, is covering the position. To take this macro pullback, here, let me enlarge the screen for you. To take this macro pullback, I don't have very much structure. Where am I going to cover the trade? I don't want to cover it right there. That's too tight. The market will bring me in and then stop me out. So where do I cover the trade? Well, maybe this old support area, which should be resistance, maybe we'll cover it above there. We can also consult our support and resistance suite, so we know the median resistance line is going to be at 42.88. Maybe cover it there. And notice where the crest in the macro line is. That's kind of in that same neighborhood. Whenever you take a signal like this, you should always anticipate that the market's going to, at the very least, try to get into the macro line. If you're really at a loss, go for the macro line. And don't keep following the macro line. Just use that as your initial stop and hold it until you see the sellers recommit to the market. That's very important. You have to have them recommit. Oh, way to go, Jim. Jim caught 15 ticks on the way down. I'm assuming in the mini Dow. Yeah, oil's getting a little stronger. See, so even that stop would have been too tight. And once you're in a trade and the market is moving against you, do your best not to panic. Try to keep a level head. You haven't risked more than you can afford to lose, remember? It's, I don't know, it's a little bit of a tough call right now to try to figure which way the wind is blowing. The sellers trying to put in a stronger showing here for sure. Looks like it's still very much a buyer's market, however. Working another trend change here. On the Falcon, another green bar sell on the Hawk, which could be bought, and even a red bar buy here on the Eagle. Now, we haven't looked at the Eagle yet, but here's a red bar buy where everything is in sync. We can even cover the trade below the low. Try not to micro-analyze your trades. See how technically the band is bearish? That's still bullish enough for me to consider this red bar buy signal. So if the market can get above 42.82, might see a little bit of an uptick as the buyers try to fight the market back toward the highs. All right, there they go. Come on now. So 42.88 we know is going to be the median resistance line. Might use that as my break even. So gold kind of holding steady here at the moment. Crude oil also drifting a little bit sideways. Come on, get up there. Yeah, the momentum has dried right up. Come on. Notice also the thickness of the bars, how earlier the bars had much more volume to them. See the size of the bars relative to how they are now, even at the turning points? Not as much participation to be sure. And unfortunately, we've moved from trend mode to swing mode, and we're about to head into scalp mode. So the market may stay dead for the rest of the morning. We'll see here in a moment. Doing my best to be patient with this trade. Come on. Well, we're getting something resembling a trend change now, or an attempt at a trend change. The market getting very, very tight here once again. So we know there's obvious resistance here, 42.86, and support around 42.76. So that 10-point spread kind of containing the market for a bit. All All right, if we pop that high, there we go. Come on. Let's get to that 42.88. Okay, according to Trade Forecaster, we're going to see about 20 minutes worth of scalping, after which time it will hopefully be moving back into trend mode. Come on. Come on. They're fighting it here, and what I'm not wanting to see is this turn into a bear flag and have the market break to the downside. But the longer it takes, the more problematic it becomes. Come on. No, darn it. The sellers are perhaps getting a little bit stronger. Looking for the buyers to come back one more time. Come on, buyers. Oh, sorry, Jim. I didn't see your question there on crude oil. Jim's asking what tick size are you using on crude? I'm assuming you're asking about the Raptor, and I'm using the regular 8-tick brick on the crude oil. Just a moment, I'll bring that over for you. Okay, where'd you go? Here we are. Okay. Here's the 8-tick crude oil. Now, of course, when the market's trending, it's all the signals look like they're working. There shouldn't be that much difference between the 6-tick and the 8-tick. The 8-tick, of course, is the default. But the nice thing about the Raptor is it does allow you to tweak. The other tools don't allow you to adjust your parameters. They're all locked, but with the Raptor, you can certainly do that. So don't be shy about experimenting. Darn it. All right, so it does look like the sellers are going to make a run at it here today. Or are they? As you can tell, I'm not real keen on trying a bunch of things just because we've already got a couple good trades under our belt. And we don't want to end up just chasing the market around. All right, so the seller's obviously coming back here a little bit. Jim says on the YM, on this 15-minute chart, the sellers are pretty heavy. I'm wondering if after the big run up, if the best that the sellers are going to be able to manage today is a little bit of a sideways type day. As they try to get back down here to the lows of the session, we get the buyers hopping in a little early. Remember, if the market is moving sideways, you can pretty much split it in half. Buyers are going to get more active in this lower half. Sellers are going to be more active in this upper half. Therefore, if you happen to be one of those traders who likes to try to buy the low or sell the high, well, as soon as it gets past that halfway point, look for the buying activity. Look at where the buyers are trying to step in. Well, we'll hang with the market for just a little bit longer. I've actually got a doctor's appointment to go to this morning, so we're going to be closing the room a little bit earlier. But we'll stay with the market for about another 15 minutes or so, till about 1:45. I'm thinking we may see the buyers give it one more push. So here's that macro pullback signal there on the Hawk. I saw a green trend line there for a moment on the Falcon, suggesting that perhaps there's some buying coming in. Crude oil here on the Falcon is producing a trend change signal. So we have an opportunity there. Cover it down there. No, doggone crude oil. I'm going to have to start looking at the mini crude just so I have a few more opportunities. The big crude market is a little bit too rich for me. All right, so we're retreating now into yellow bars on the Hawk. That's going to nix the macro pullback signal. And now we're working a proper trend change signal here on the Falcon also. Into the hard edge. So we know a reaction is coming. And it's pretty much going to be the last chance for the buyers to defend these lows before the sellers take them out to the woodshed. Jim says the market needs a good, healthy pullback. Which way? We've had a pullback higher relative to the daily chart, and we've had a pullback lower relative to the 5-minute. Oh, I see. Jim says, especially when I'm short, the market needs a good pullback to the downside, obviously. Okay, well, the buyer's trying to muster a rally here. It's The sellers have made a decent move lower. We're into the hard edge. We're anticipating some sort of reaction. Here it comes. Tony's short also. Tony says, pull back. Well, you guys may choose to get a little bit more aggressive with your stops here. All right, there they go. So the buyer's starting to show up again. And we've got don't have the first micro macro cross signal just yet, but we are looking for it. So we're also long on our crude oil trade, and that's flatlining also, but looking for a little bit of a rally here. Really need to see some market participation. The players have really starting to walk away from here. I think the ones that wanted to get in are in. There's a little bit of profit taking perhaps on this move down. Working this first micro macro cross higher. Right now the market very, very neutral. Very neutral. Actually, in fact, I'm going to let that one go. It is a first micro macro cross. It looks like it's going to pull here into a macro pullback. Mo is asking, Eric, I have a question. See on the hawk where the micro line goes green, could that be a good indicator to go long? No. And the reason, well, okay, yes and no. First off, the signals that I've pointed out to you are signals that we have developed at Indicator Warehouse. You know, we've studied the charts, we've studied the signals, and we said, okay, these are your highest probability signals. That said, from time to time, owners come to us and say, hey, you know, you might want to check this out. I've been watching this. It looks like it could be a pretty good signal. So I'm not nixing what you're suggesting here, Mo. I think it boils down to how aggressive you want to be with your profit objective. Because when the micro line goes out of sync, this is actually a macro pullback signal now. And we're actually looking for the market to resume the trend. We're looking for the market to pick up the downtrend. Now, if you were just looking for a very short-term move, you're probably going to get it. And you're going to have to study it a little bit, because you see, the microline turns a lot, especially when the market starts to get a little choppy. The microline turned here, the microline turned there, the microline turned here, the microline turned there. Now, each of these situations may not be profitable enough for you to get a profit. You see, it turned here and it turned here. So there's a lot of turns in that microline. And in hindsight, it looks like, hey, why didn't I just buy it when the microline turned green? It went higher. Well, because you're going to run into situations where the microline turns red, you're shorting, and it's a macro pullback signal, and the market goes higher. Microline turns green. Oh, you start buying it, it's a macro pullback signal, the market goes lower. The microline turns green, you buy, the market goes lower because it's a macro pullback signal. So the higher probability signal is the macro pullback. Now, this macro pullback never triggered, and in fact it continued to fade, and the market started heading higher. But like I said, you're going to have to do a little bit of research on your own. As a rule, we don't buy or sell just because the microline changes color. But again, you might be onto something that we haven't considered. So if you want to follow it for a little while, for instance, there was one of our owners who figured a way to incorporate the yellow bars, and I forget exactly the way the signal was printing, but it was essentially a yellow bar failure, and I'm sorry, I don't remember what the exact parameters were. But it was something like this, where you produced yellow bars on a buy signal, and it was pretty much an early red bar buy failure. And he found that it had consistent results to it, and he brought it to our attention, and it did work. I think we already had enough signals going on the hawk, but I know it was something that he followed. See, here was a yellow bar signal in a downtrend, and he would treat it as a failure signal. He would look to buy it, and that worked out. So there could be other signals available, but I don't think you want to get too aggressive and just buy and sell because your microline has changed color. I think that might be a little bit too quick. Might be a little too quick on the trigger there. All right, you guys, on that note, we're going to button up the room here this morning. Like I said, I've got a doctor's appointment to run off to. Quick reminder, tomorrow we are meeting at the open house venue, so I hope to see you guys there. And yeah, be careful out there. The market definitely in a little bit of a sideways mode from the early morning rally. All right, you guys, catch you tomorrow. Bye for now.